Well, hello everyone. Thank you for joining me on today's webinar, the Elite webinar. We run these every week. Usually Chris is hosting, but we decided to change things up this week, give Chris a break for the week, and I am hosting. I know sometimes I'm on, joining Chris, but today it's me and me alone, and it's good to be hosting this. I haven't done that. Um, in a year or two at least. Well, Chris has been doing a fantastic job just um, hosting these week in and week out. So I hope you've enjoyed them and had tremendous time with the value and insights that he shares. And of course, when I come in, I do my best as well to impart some of my experiences and thoughts. But without further ado, let's kick things off. The S&P 500 index. This is what we're looking at here, minus, of course, the Alpha Cross Evo indicator that some of you know and love, as primarily the masterclass students. And instead of any other stuff, any other volume and anything, I just have the two moving averages, simple. Okay, two simple moving averages. The 50 is the green line here, and then the red is the 200-day moving average. All right, so let's break down what's happened with the S&P 500. We know the S&P 500 on Friday closed down about 0.75%, so 75 basis points on Friday. In fact, I think it's fair to say it wasn't the greatest of weeks, right? So if we have here Monday, all right, Tuesday, Wednesday, Thursday, and Friday, take a look at Friday, okay? In fact, for those of you that are an elite, know that I barely placed any trades this week, if any. Why? Well, I mean, I'm hoping you're looking at it and it's clear as daylight why. Monday wasn't very indicative. It was a bullish day, but I sensed something. And those of you that are in elite in real time, you will know my apprehension. To put this very clearly, what do people pay me for? Why do I get paid? Why am I where I am? And I hinted at this, and I made a post in Elite server. But for those of you that are joining afterwards and watching the recording at a later point in time, why am I the one getting paid? Why am I the one, whose name is on the door, as Chris always says? Because of this, you're looking at it, okay? And I'm not it's not hubris, it's not overconfidence, it's not ego. This is a fact. This is pure, just me telling you straight up that in moments like these, I don't always get it right, but this is where I come into my own, my ability to read markets. And I always say it to my students, members, and in the masterclass, I say the ability to have my finger on the pulse of the market. This is, in my view and humble opinion, invaluable. Can you learn this? Via a course, or can you learn this by reading a book? Can you learn this by, just day trading or swing trading and investing alone? Can you learn this by following some guru? Can you learn this by, having $1 million account or $1,000 account? Fuck no. The hard cold truth is you can only learn what I do by dedicating your entire life. And some will be able to do it. Some will be 6 feet under and they'll never figure out how to do it. And I am, one of the few that's been able to do it. And I'm not going to toot my horn too long, but I will say that I did it back in March and April, and throughout the dips. I'm not going to say we haven't had a red week, because we have. We've had a red week, but guess what? We haven't levered up. We haven't been going wild and buying meme stocks and SPACs and garbage stuff, over the last week or even 2 weeks. That's not my shtick. That's not my style. And as a result, yeah, we're down, but that's fine. The broader market this week from Monday, okay, Monday's close onwards, is down about 1.5%. And I know it doesn't seem indicative of what the kind of pain that some people have felt, especially in the markets. Why? Because this is not purely indicative of some of the more volatile stuff. If we look at something like the NASDAQ index here, all right, coming in from Monday, the NASDAQ has fared worse than the S&P 500. in terms of a drop. So that's 2% drop, right? And I assure you, if the index is dropping 2%, someone that's holding, AMD or Square or anything like that is dropping even more, right? So to put things into perspective, I understand that people are, a bit, I would say, negative and a bit fearsome or fearful, I should say, and maybe they're feeling a bit nervous, and that's fair, that's fine. But I am here, especially for the elite members and my students, to guide you through. This is where I come into my own. I am not here and contradictory to what people think. And I say this again often. Say it again. I'm not here to make someone money by giving stock picks or tips or all that nonsense. Okay, I'm not here to do no signals or none of that stuff. Okay, I'm here to give people the unfiltered views, and of course, it would be worthless if I had just started. But I hope my track record, my transparency, my pedigree, my experience, my skill set, hopefully speaks for itself. And you're seeing that if you're an elite, where I've been able to shield us from some major pullbacks and do well. And if you're red, that's fine. Everyone is going to be red in some week or the other, and that's okay. But I guarantee you, as sure as death and taxes are guaranteed, I guarantee you that you will make it back and then some if you stay the course. Okay? You can write it down from me and repeat this quote to me back. If you ever want to say, hey, Riz, you were wrong, I'm willing to bet my name on it. You will do well. You will see things through no matter what happens with the market this week or next week or next month. You just have to have the right guidance, the right education and training, and of course, not stand and get in your own way. All right. So something that I wanted to, clarify and touch on, as we had a market that is not green and up and up and up like we're used to, and it's been a phenomenal run since last year. And I say it all the time, there's been people waiting on the sidelines for a crash. How fucking dumb. And I'm unapologetic if you're one of them. I don't care if you're in elite or not. How fucking dumb. I don't have patience for people that are given everything and they do nothing. Okay. To me, there's no excuses. And I get messages and emails every single day. Riz, when's the crash? What do you think about this market? What do you think about this? What do you think about that? And I'm like, if you want to know what I think, well, you don't have to, send me an email. You can see it. People have access to what I'm doing. I feel like what I'm doing is a better validator than what I think. And that's what separates me from others. I don't just say what I think, I show, I do. And to me, I hope that is, I sincerely feel and hope that it's valuable and it shows. And with that said, with my diatribe and monologue there with what's happening with the markets and what people must be feeling and going through, the S&P 500, as I said, is down about 1% and a bit. Feels worse, but it isn't. I assure you, you know what? If we see a lower level for the week coming up, I highlighted to the elite members, and I'll highlight this again because the chart seems to have cleared off. The 4,300, excuse me if it's not exactly 43, but it's 42.99, but you get the point. This 4,300 level is where we want to keep an eye. And I showed a brief video to the elite members, actually Wednesday or Thursday or something. I think it's Thursday. And I said, maybe we're going to see the 4,300 level if we continue to drop. And my, we are literally, I think, 27 points or so and about 0.5% away from that level that I gave back in Wednesday or Thursday. Okay. And then people are going to ask me, Riz, where do you come up with these numbers and yada, yada, yada. And I'll tell you, it's not something super complex. This is more so with experience, and because I'm assuming the fact that 4,300 is a nice round number. We know that the market has touched in the last couple weeks, this level before. You can see these tails or shadows, whatever you want to call them, or wicks. So I'm assuming that level is a key level. Doesn't mean that the market has to go here and there's a guarantee, or that it even bounces up from here. If we go lower, if we see markets go lower, I can almost assure you that we will go a little bit lower than 4,300 if we start Monday with the red tape. Okay. But again, I'm not a fortune teller. We're in the probabilities and risk management game. And what I feel like, if we break below 4,300, okay, keep an eye on the levels, because we know, especially as large cap traders, large cap stock traders and options traders, that if we are, making money or losing money, we have to factor in the markets, right? And that's why I'm outlining some levels and ideas for you to think about. The 4,300 level in the index. If we go lower this week, keep an eye on 4,250. Okay, nothing complex. Again, this is not voodoo magic. Okay, you don't need to pay someone, a bunch of money to give you these levels. This is just experience and some insights, and what I can, well, if you're paying for elite, or you're part of elite, or you're a student, well, you deserve this kind of insight. So this is why I do it. Now, with the S&P 500 covered, let's move on to a few different asset classes. I know Chris looks at a few different things, but I have here on my setup a lot going on here. But top left, the 10-year Treasury yield. Remember when we were in the start of 2021? Everyone and their dog was talking about Treasury yields, right? This is the 10-year note. Remember, the yield was rising, and oh my God, and it was, something to be concerned about. And I called it what it is: a wall of worry, something the market is concerned about as collective. And remember when we had the pullback, in tech, in fact, let's bring that up here. We had the pullback in tech, right, at the beginning of 2020, right? February, March. I'm sure all of you who are, whether an elite or not, I'm sure if you took some speculative, risky, volatile growth stocks and you held them, or you traded them, or maybe you were even trading and holding some SPACs, you were probably feeling some pain with that drop in the NASDAQ of about 11% back in February to March, right? And then April, we did a little bit better. And then since then, we've done well, but we've still had some big pullbacks in growth stocks, tech stocks, yada, yada. Now, why did that happen? Of course, part of it had to do with what I just highlighted. It comes back to the time where we had Treasury yields right here going up, right? Notice from February to March, this area that I am highlighting right here, look at the yield. This is when the index, especially the S&P the NASDAQ, got pummeled. Why? Because yields had gone up. They're at 1-year high. And I'm not going to go into the diatribe of what Treasury yields are, because there was fear at that point that, there was inflation. And guess what? It was partially inflation, but it wasn't as big a deal as everyone made it out to be. And since then, the yields have been dropping, as you can see. Not the end of the world. The market stopped worrying about yields and then now focused on CPI, pure inflation metrics. That's what it's worried about. Okay. And that's what you actually saw. That's what you actually saw in the S&P 500 this week. Inflation worries. We saw CPI numbers. We saw broader inflation on an annualized basis at, I think, about 5.4% or something, markedly above the peak, or I would say the target of 2.5% to 3% annualized inflation that the Federal Reserve aims for year in and year out. And I think it's something that, in my view, I'm not an economist. I'm not on the Federal Reserve. I'm not, looking at the data that they're looking at. But from what I can see and what I look at, I can say that this isn't a short-term thing. This isn't a light switch. We're not going to have inflation that's around 5%, 5.5% annualized, and then it's just going to go back to 3% in the next quarter. No, I think it's here to stay. The key point is, how long? Is it here to stay for the next year? Are we going to see higher levels of inflation for the next couple of years? Maybe the next 6 months, which is, I find, these things don't retract and revert back very quickly. It takes time. So we're not in a when we're talking about inflation, we're not talking about weeks. We're talking about months and maybe years. All right. So something to keep an eye on. With that said, crude oil has had a fantastic run. In fact, I mentioned that I haven't traded oil for some time, and you know what? I can still say I haven't. And guess what? It's looking a bit interesting at this level. We had a nice rally in oil, almost getting to the 76 handle. Why? Because OPEC didn't reach a deal for supply cuts initially. Remember that first meeting? They couldn't reach an agreement, and then the market was bullish, and they're like, you know what? They're not increasing supply. They're not, doing any of that, which we expected. So the market, felt that okay, oil demand is still there. More demand, less supply equals prices go up. Okay, basic economics. But what happened the last few days is they finally reached an agreement. OPEC finally reached an agreement of increasing supply by about 150,000 barrels a week or a day, I think. Sorry, and it's not too big a deal. Okay, the barrels supply a day is in millions. Okay, and millions, and that's the kind of numbers that matter. 150,000 increase, it's not too much. And even that, the market didn't react too nicely to it, even though I wasn't surprised. I thought they were going to actually do a bigger supply push and a production push than that. But either way, I am looking at oil maybe around the 70 level if it gets there for a potential long. Not an official trade idea, but something to keep an eye on. Gold, I haven't been too enthralled by gold, for the last couple months, especially after I closed off those hedges, which was a good thing, and got out at the right time because, May and June haven't been in a good month for gold prices, although July has turned that tide there a bit. Okay. But still, I don't hold any gold stocks, and I don't plan on doing so just yet. I also have the US dollar on the bottom right. This is the US dollar index. Again, the US dollar is pretty strong. All those people that have been calling for the doom of the US dollar, I find it so absurd. And maybe I'm a bit jaded because I get these questions all the time. Riz, the US dollar, inflation and pumping and, stimulus and money printer go brr and all these kind of things. They're like doom and gloom. Oh my God, the US dollar is going to be obsolete. It's going to be worthless, and we're going to be Venezuela. And I'm like, hold on a second, chief. Like, I don't know where they're getting their news from or what kind of nonsense they're consuming in terms of, I don't want to call it information. I'd rather call it misinformation, like doom and gloom stuff, and frankly, conspiracy stuff, which I have no time for. But I have to lay out the facts. And I say, look, the US dollar has gone through a tremendous amount of catalysts, events, turmoil. It's gone through terrorist attacks. The US currency has gone through financial crashes. It's gone through world wars. It's gone through, increased in inflation. It's gone through deflation. So what is to say that the US dollar is somehow going to be completely worthless? I don't know where these people come up with this extreme narrative. Does it mean that the US dollar can get weaker? Sure. But in fact, the opposite's been happening. Take a look at this massive rise. What is the US dollar index? This is the index, not the US dollar compared to one currency, but broader currencies. The yen, the GBP, the Canadian dollar, you were talking about the euro, we're talking about, all the major currencies, okay? And then you bring it into an index and you do a comparison of the US dollar. That's what this represents. It doesn't represent the US dollar against a single currency, but as an average of broader worldwide currencies. And sure, the US dollar is down a lot since 2020. And of course, it's expected. I'm not too surprised. But it has made a big comeback. It's not doom and gloom. It's not worthless. Nowhere near worthless. It's still holding. In fact, the US dollar isn't the only currency that's gotten weaker. So this is where people forget. What are you going to do? Use Bitcoin only? Yeah, I know it sounds amazing to some, and guess what? That's not the reality. It's not happening. Even the biggest Bitcoin bulls and Bitcoin Marxists and Bitcoin fanboys and fangirls will have to admit can't use that shit for anything. In terms of buying a soda or buying a meal or buying a plane ticket. Okay, yeah, you'll hear some, in the news, a large transaction happen for a house or a supercar or something like that once in a while, but that's far and few between. Try and go to the grocery store to buy groceries with Bitcoin. They're gonna fucking laugh you out of there. All right. So the reality is very much different to what people think, and I bring that up why? Because I see it all the fucking time. It's nauseating and it's tiring with the amount of people that keep peddling their nonsense. Okay, and this isn't political. I don't have any bias towards or against the U.S. Or any country, as a matter of fact. I'm simply sharing that the reality is very much different to some of the narratives that are spun on the internet, because anyone and everyone has a mouthpiece and a way to express their views, no matter how fucking stupid and worthless they may be. Okay, moving on. The S&P 500 index sector ETFs. These are not all the sectors, but these are the ones that I monitor. Okay, let's go to the year-to-date chart for this one. Take a look at this, I would say, S&P 500 dark or bright red line here. The S&P 500 is, amongst all the talk of an imminent crash and, a collapse and a recession again, even though we were just in one, and all kinds of fear and gloom, the index, the U.S. market as a whole, is up nearly 17%. Then that's counting last week's pullback, this past week's pullback. Okay, so it's still up 17% on the year. Okay, last year was a tremendous year. Okay, last year was a tremendous year, and we're still up another 17%. Wow. Okay, but more importantly, take a look at some of the different lines here. I know I have a lot going on, but the purple line, XLRE, real estate, is the winner currently year to date. The real estate sector done amazing this year, up 30%. Okay, energy has been one of the biggest winners this year, but given back a little bit of those gains with the oil prices dropping and currently still up 28% after this big drop, right? Financials have done well, and they continue to consolidate sideways, about 25% up on the year, followed by tech. Tech is just barely inching past in outperformance of the broader index, and that's about 17.5%. The S&P 500, the SPY, I said here, is 17%. The XLV, which is the healthcare sector, okay, underperforming the broader index, and it's doing about 14% year to date, and followed by the biggest underperformer, utilities, which did have a nice uptick this past week, and I mentioned that in Elite, up about 8% on the year. All right. Usually, oil is the one that's underperforming. Again, if we looked at this the last year, it would be, that would be the case. But this year, oil has just been the leader. But I could see, and I'm sure you can see, that's changed over the last week. Okay, take a look at here. Real estate's now the leader in terms of sector and industries. Okay, so that covers off the schedule here. I am going to just touch on a few ideas that I have, and again, I appreciate everyone just holding off on the questions for now. I will get to them if you're in here live, but a few ideas that I think are worth mentioning or taking a look at. I'm not going in and getting in anything right off the bat on Monday. But as I said, I'd rather wait and see what happens. I'd rather let markets find a direction. And if that direction is lower, I don't want to ideally be buying things too early. All right. But a few things we can consider. I like, and I mentioned this probably the last few weeks as well, but I'm going to bring it up here. I actually like Netflix here. Again, not yet, but maybe it sets up to get to the 520 level, right? It's about, what do we have here? Maybe about 1.5% drop, which I think is doable. 520 area, 515, 520, it's great, another 2% drop. If we get to the 500, 510, 507 area, well, I think I might be taking a position long on that one, right? So Netflix is one. Just one thing I want to bring your attention to is this is a big earnings week, and guess what? Netflix is one of the companies releasing, and I believe on Tuesday, right? So something to keep in mind. Okay, the release earnings, that can be a major catalyst for some volatility. Another company that, if you are looking for something that's a little bit more stable, is more of a low volatility, low beta company, and the name shouldn't be too surprising for you, is Verizon. This one looks to be consolidating around this 56 area. I think it's a decent entry, even now on Monday if you're looking at it, because guess what, it's pulled back from the highs significantly. Again, this is not something that you're going to be looking to get a large move in a short amount of time. But if you're looking to buy something, carry it for a few months even, it's not too bad. Just be mindful. We have earnings. We're in earnings week, earnings season. So, many of these companies I'm talking about are probably going to be releasing at some point in time. And then just a last one that I want to just touch on. There are some opportunities opening up, of course, in some of the tech stocks, but I'm kind of waiting. One that I do like, I don't have a position in it right now, is Square. And you're probably thinking, well, Riz, it's not too far off all-time highs, and I say you're right. And I'm not saying that it's going to get there anytime soon, but I do find that this is a fantastic business. I really like the company. Obviously, it's a growth stock, it's a tech stock, and if these kind of tech stocks get battered in the coming week, well, I can assure you Square will be in the same boat. But I do like that. It's holding these gains right now. From the 200-day moving average here. If it closes in around 225. 220, you know what? I might be considering it, and that could happen this week, depending on how broader markets go, because it's about a 5% drop, 5 to 7% drop. Again, this is not uncommon to happen in a week for something like Square. Take a look at Nvidia. In fact, right? It's not, Nvidia just obviously had a massive run, so I'm not surprised. But it's had a tremendous drop. Like, take a look at the candles there, right? From all-time highs, it's down about 12%, and I believe that's in a week and a half, right? So not too uncommon. In fact, Nvidia has a split coming up, so I'm sure. I think once the stock splits, not that it really matters to the fundamental or the valuation, but I'm sure people will, there'll be more perceived value because people are going to see, oh, it's a lower share amount, and they're going to be more, privy to buying it. We've seen it happen with Tesla. We've seen it happen with Apple, and so on and so forth. And you know what? As much as it doesn't matter in the grand scheme of things, a lower share price, I find that smaller investors, especially those on Reddit and Robinhood and all that, do gravitate towards smaller priced per share stocks. And last but not least, was something that we all know of, is Boeing. Boeing is currently oversold on obvious news. They have some production issues. They continue to keep hitting up on one issue or another, whether it's the Dreamliner or whether it's the 747 Max. But you know what? Like I said, since the pandemic, they're not going anywhere. I think I would wait to find a floor. Of course, this isn't a bullish move right here. This is a downtrend, and we've just pierced, and we're right at the 200-day moving average. I would see if you can find a floor. Anything around 210 or so is, I think, a good area to potentially scale into. Just keep in mind we have earnings at the end of the month for Boeing. All right, so that's enough from me in terms of talking about markets. I want to now take some questions, and I see some of them are already here. We'll go through that now. And Liam asks, what's your apprehension due to experience and gut feel, or just how overextended markets have gotten over the last couple of weeks, or both? He's asking that in regards to what I said earlier about markets. Well, Liam, that's a good question. Again, it has to do with, you mentioned gut feel, and I'm sure that's part of it. We call that intuition, or really whatever you want to call it. Intuition is just your subconscious picking up on things that your conscious hasn't caught up with. And yeah, it could very well be that. And of course, it's not a secret the markets have been extended, right, for the last not only just a couple of weeks, but maybe over a month. So hopefully that gives you a little bit of insight. Ryan asked thoughts on Walmart and gambling stocks heading into the fall. Things like Penn and DraftKings. So Walmart first. Walmart's looking great. Great company, fantastic business. Obviously, we've traded this quite often, and I think this is another good company. It's looking like it's might stall around this level, which is sort of a little bit of a resistance area. The 142 area, 143. But if you have the time frame for it, I think you can't go wrong with Walmart as a company to hold for I would say at least a month or so. Now, in terms of the gambling stocks, like DraftKings and Penn, let's bring up DraftKings here. DraftKings is an interesting one. I know it got battered down after it was a short report on it, a month or two ago, and then it recovered, but it's come back down. And I guess this is just supply and demand taking hold. But I do actually like it. This is a good find. I do like it, especially as it closes in on the 42 area. Maybe it does, maybe it doesn't, right? But around the 42 area, I think it's a really, really solid entry point. Maybe if you really like the sector, you feel bullish on it leading into the fall, maybe take a starter, right? Not a bad idea. And Penn National Gaming is another one you mentioned. And, this one is another one you could continue, but I would be a little bit more wary with this one. Just solely based on technicals, and the big fade that we have going isn't very inspiring. In terms of a technical trade and a swing trade per se. Again, I'm not talking about investing for long term, but for swing trading, I would give this a little bit of time, see where it's settled, because right now it's broken below the 200-day moving average. And as you can see, it doesn't look to be letting up just yet, especially with the backdrop of markets being a little bit uneasy. Matthew asked, what's my favorite Canadian REIT? I mean, I don't have a favorite per se, but one you can consider is Canadian Apartment REIT. It's done significantly well. I mean, it's been a fantastic company. It is a fantastic company, although I just find it to be a bit overdone now. Although this is not a trade idea, this is just something that I have experience buying and holding, and I have held. It's been amazing over the years. Take a look at this, right? Remember, REITs, you can trade them, for months and whatnot, but holding the solid ones is just tremendous. And in fact, Canadian Apartment REIT used to be giving about 4.5% yield. Right now, it's a paltry 2.5%, not even 2.5% at these prices. So, although I love this company, I don't know if it's the greatest entry yet. Okay. Also, and I can see someone mentioned that, right? Loblaws is a good play. It's these companies. I don't know what is this Loblaw? What is the sign right here? Like these are more, consumer staple companies. These are companies you buy if you're looking to buy and hold. Would not buy this for a swing trade. I personally wouldn't buy it at these levels. But that's very much up to you. In terms of Fubo, someone asked about Fubo. Fubo is I thought it was a TV company or something, not a gambling stock, Orlando, but this one has had a lot of volatility. It was, it's kind of like a meme stock, it was on Reddit, and, all that. I personally feel like, this is a lot more of a speculative trade. You have to be very careful with your position sizing on this one. Doesn't really have the fundamentals that I'd like to back up a sizable position. And the fact that it's broken the 250-day moving average and it just settled at the 50 actually gives me some pause. I would like to, especially in this kind of market, I'd like to give it some room to see if it settles, and maybe consider around 22 area. Not at this price. Now, personally, there's far better opportunities, I'm sure, that are worth a closer look with our money rather than something like Fubo, right? Coin. Ryan asked about Coin. Obviously, one that I'm sure many are familiar with. This one's had a horrible post IPO. Let's face it, and nearing the lows since it went public, and the lows are about 210. So I feel I feel like, you know what, an entry here, especially if you're bullish on crypto or you're interested in the space, is not a bad idea if you don't have a position yet. With that said, I would like to highlight that I do have a position. It's in the red, but if you feel like this is a good point to entry, I cannot blame you, because you know what, this 220, 225 area has held as a good support before. Again, it is a new IPO, and of course the company is relatively new in the space, but also I'm talking about new on the market, right? It's as a public company. So something to keep in mind. I do have a position. I continue to hold. If you're looking to enter, you know what? Not bad, especially if Bitcoin or crypto as a whole starts picking up, which we know hasn't helped the hype and the momentum in this IPO. Ryan also asked, any pharma companies? So, in terms of pharma, I keep it to the big ones. We have Sanofi. This one's just been kind of up and down, just holding around here. Pfizer, of course. And honestly, for these, I don't see a swing trade setup per se, but from an investment standpoint, especially if you're looking to diversify and have exposure for an investment account to different sectors, and you want some exposure to the healthcare or pharma, well, you know what? Pfizer is there. There's Cardinal Health. This is more in the healthcare space. In fact, if I scroll down to, maybe I passed it already. Yeah, I passed it. I have my watch list here. Then you can see here, these are the pharma and healthcare companies, right? So we have Merck. Merck is another excellent company. We have GlaxoSmithKline, another fantastic company. Eli Lilly has a tremendous run for obvious reasons, some great drugs in the pipeline that have also got some approval. And you know what? The list goes on and on. There's so many. But of course, these are not, unless something occurs, they're not the greatest setup. But if you want the cream of the crop, you just got some suggestions from me. All right. Any last questions? Again, it's fantastic being on. I appreciate everyone that's come on so far, and your questions and your participation, and of course your support. It's great whether you're watching this live or whether you're watching the recording afterwards. I truly appreciate the support. I appreciate you all giving your time and your effort and being on and watching this, whether you're watching it live or not. I think we'll leave it here. Some great questions, and I appreciate everyone getting on. Let's see how this week goes, and you know what? No matter what happens, we will be fine. One last question came in from Orlando MPLX. Actually, this is a great company that I've held for long term, even throughout the major drops. It's for the last couple years actually, and it's done tremendously well. But we're just pulling back. I feel like this is not a company for swing trading. This is a company if you want to buy and hold. The dividend yield is a fantastic 10% or so, but with that said, you have to make sure you're okay with the risk, because this is a smaller pipeline company with the high payout ratio. Of course, the dividend yield is significant, but that comes with its drawbacks because it's a significantly high payout ratio. And the way it's structured, it's a limited partnership, so the tax on this isn't the greatest. The tax structure for when you do get paid the dividends, so it's something to keep in mind. But for a long-term investment account, it's a great company to hold, so long as you don't just go overweight on this and have too much size. Make sure you diversify, right? For this thing, see if it can get down or below 26. I think with oil retreating, with supply increasing, I think this can go a bit lower to 26 or even 25, 24. Okay. But if you're in for a long term, it doesn't hurt to start scaling in for it. Okay, if you're in for the long term. In the long term, these shorter, these precise entries don't matter. We're not trying to day trade or anything like that. Right. So hopefully you guys enjoyed it. Thanks a lot for getting on. I appreciate it. And you know what? Have a great rest of the weekend. And we'll be here to kick ass on Monday. Cheers.